Right now, I feel like we're flying blind when it comes to pricing nature. So I've got kind of two questions that go through my head, which is one is like, how do we go about pricing nature risks? And then if we can do that, how can we start to make decisions about that? So whether we're the C-suite of a big company and how we allocate our resources, or if we're a pension fund and making portfolio decisions. Well, I'm really excited because we've got Dimple Patel, CEO of NatureMetrics, who's going to help me answer those two questions. We were together, we were with our kids at Harry Potter World, and the context is we're both members of YPO. What is YPO? What does it mean for you?
Yeah, so YPO I came across, I think about 4 years ago now, and it's effectively this incredible group of entrepreneurs globally. So we have chapters, so we're both obviously part of the same London chapter, but chapters across kind of all different cities and also different sectors, which I think is really interesting. So starting to think about not just changes that you're seeing in terms of your own sector, technology and scaling businesses, but actually really being able to learn from people that are at different stages of growth themselves. So, yeah.
And you're what, like third-time entrepreneur now? Is this your third business?
Yes.
As a sort of CEO and leader. I mean, why don't we start with where you are now, NatureMetrics? Like, what is NatureMetrics? What do you do? Who are your clients?
Yeah, NatureMetrics is a nature data intelligence company. So we support organizations with actually measuring their biodiversity on a global scale. The business has been around 10 years. It actually started as a lab services company. So providing environmental DNA data sets for initially conservation. But it's really over kind of the last 4 years that we've started to see, particularly with the evolution of kind of big data and some of the AI modeling, to see the commercialization of its application in terms of, broader organizational reach, global level, government. But we really help organizations actually measure and quantify their impact on nature and start to pull that into their business decision making.
And it couldn't be more timely. I mean, in January, there was a report out from our kind of joint intelligence talking about how exposed just the UK is to biodiversity, but the reality is every country is. But before we unpack that, like you said, environmental DNA, eDNA, like if I was explaining this to a 16-year-old, what does that mean? Like, how do you test that? Why does it matter?
Yeah, so this for me was the part of the product that I first fell in love with when I heard about it. And it absolutely blows my mind that these capabilities exist. So environmental DNA is effectively extracting the tiny fragments of DNA that are left in natural ecosystems. So predominantly for us, that means soil and water. We're also now extracting fragments of DNA from the air as well.
Okay.
And what we do with that DNA is map it back to the species or the organism to which it belonged. But what we're able to then do is effectively build up forensic level data sets that map out every species that is present in an ecosystem. So that's everything from different types of bacteria right the way to blue whales, but effectively from a bucket of water.
That's incredible. And I suppose so going from that, and I can still remember the kind of videos of Prince William doing the test with the strawberries, but it's sort of like Sherlock Holmes, and I'm sort of like unpacking that data, as you say, forensic data sets. But can you who are your customers, your clients, especially on the corporate side? And then can you kind of link, why do I want to have a forensic data set of biodiversity, and how's it relevant to a company?
Yeah, of course. So on the conservation side, the application is very obvious. We want to help them prove biodiversity uplift from the work that they're doing. We want to encourage more finance into conservation and restoration. On the corporate side, though, it's actually really helping them manage their risks. So that can be anything from companies that have got supply chain risks to helping them understand their soil health and ultimately the resilience of their supply chain. So if you have exposure to coffee, cocoa, all of the commodities that they were actually hearing about in the news headlines, a lot of that comes back to what is the quality of your soil? Is your, the bacterial composition what you need it to be? And how do you really quantify that and start to, the management actions, are they having the outcomes that you need to really bolster your supply chain and deliver that long-term resilience. On the kind of mining energy infrastructure side, that's much more related to regulation. So, those industries have a huge impact in terms of the environment in which they're operating, and often are operating in extremely sensitive areas. There's a huge stakeholder landscape that they have to navigate. And data, what I love about it is it's so objective. Like, it can be the language that brings those stakeholders together, builds trust with local communities, with regulators. But actually, when you're then thinking about things like invasive species risk, endangered species, where should you locate your operations? We're able to help them make those decisions rather than face risks of kind of penalties, operational stoppages, which can be very expensive for them.
So there's quite a lot to unpack in that. But so if we go back 10 years ago, if I'm a big company in the FMCG space, whether I'm a Nestle or a Unilever, or maybe I'm a sort of Tesco's or a Sainsbury's, or I'm a Cargill, what's changed versus 10 years ago? Is it that I can measure stuff that I didn't know? Is it like regulation? Like what? Because my sense was 10 years ago, people weren't really looking at this stuff. And, obviously fast forward to today, they are. And, the Joint Intelligence Report, like what's changed and why?
I think there are two things at play, really. One is, actually, if you look at the depletion of natural resources over the last 50 years, that's really quite jarring. And, my family we have a farm in India, so we grow sugarcane, mangoes, and I grew up going back there every summer. But actually what I saw was the decline in our soil health. All of the conversation would be talking about what the mangoes have been like this season, what the yield has been like, the prices. And so they were all effects that were being felt gradually. But I think people didn't quite have the tools available to them to deeply understand what those drivers were. And also, when you think about climate, everything is so interconnected. So what are you able to do? What are the actions that are within your control to kind of support the work that you're able to do? So I say that's the first piece. And the second piece, I think, regulation has really shifted. And so on the one hand, we're all now much more aware that natural ecosystems are really important to business resilience. But regulation has also kind of really pushed ahead in terms of pushing corporates to actually start to think about it. So what we saw with carbon, hopefully we're now starting to see happen with nature. I think the risk plays out slightly differently because nature is much more localized and those pressures are felt much more deeply by the companies actually having the impact. So you have less of the public good problem. But that regulation has really forced corporates to start to invest more in terms of not just their monitoring, but their reporting. And then once you start measuring and reporting, you actually start to think about the impact and the change that you need to be making.
So picking on that, and earlier in your career, you were, a fixed income trader at Goldman Sachs. So I can just picture you there, Bloomberg screens. I'm guessing you lived through the sort of Portugal, Italy, Greece, market volatility. You'd have had all kinds of data in front of you. So you're managing risk, you're pricing risk. Like, can you paint that picture of like the dashboard you had then, and what does that now mean if I'm a big corporate, or maybe I'm an investor, maybe I'm a pension fund who's invested in these companies? What can you now do with all of this big data?
Yeah, sure. So an example would be, let's say I'm trading commodities, and we know pricing, something that we're talking about a lot, given everything that's happening in the world at the moment. But a lot of commodities pricing is linked to climate risks. There are very few nature risk models out there. And on top of that, nature risk, which uses metrics that are comparable across different geographies. So when you think about your commodity supply chain, that will be a global supply chain. How do you compare your coffee supply coming out of South America with your coffee supply coming out of Africa if the ecosystems are fundamentally different? How do you trust the data that is then coming through to you? How do you know that if you make a big financial decision, you're making that decision using data that is as accurate as it possibly can be?
So if I'm a big corporate, buy a lot of coffee all around the world. We can just picture the big brands that make coffee. What can I now do with NatureMetrics eDNA data that allows me to compare my coffee I'm buying in Colombia with my Kenya coffee and so forth?
Yeah, so two things. The first, which we actually launched quite recently, are ecosystem condition indices. So our first one is our soil ECI.
Okay.
And then we're currently working on our freshwater one as well. So what this does is it takes eDNA data, so the full complexity, all of the different types of bacteria and organisms that we're picking up there, and then aggregates those to a single metric, so a 0 to 100 score that you can use to compare soil in, say, Brazil with soil in South Africa, for example, and also look at that versus a reference site of healthy soil. And so if you're looking at healthy soil that's got a score of 80, your score is 35, you know that is not in a good position.
So I've literally just done my Bupa Wellman. So this is like my Bupa Wellman, right? Where I can not just my, my weight and height, but my bloods, my good fats, my bad fats, my probability of diabetes, my probability of a heart attack in the next 10 years. This is the equivalent for ecosystem health that you've developed.
Exactly.
And so if I'm a large FMCG, I can now look at my portfolio, my supply chain, and go, this is healthy and this is not. Does it then, or can my team then go, well, what interventions do I need to do? So I know I need to have less milk, less cheese. What if I want to do something about my ecosystem health in my supply chain, what can I now do?
Yeah. So we typically see this play out with a couple of clients that we're working with at the moment. And one step is to say, well, I understand where those risks are and how they're distributed. I'm going to think about how I effectively build backup plans for those supply chains. So if I need to move where I'm sourcing my strawberries from next season, let's get ready for that move because we know that there's a risk over there. And that might be where you have large corporates that are a little bit further removed from kind of what's happening on the ground. We do also have some clients that are working really closely with the farmers and actually looking at some of the actions that can be taken to better manage that land. And we've seen some amazing outcomes where actually some very well-known household names have worked with farmers to move towards more regenerative farming practices. And what we've been able to prove is that the soil health has improved off the back of that change in practice.
So what are the change in practices you can do? And if you were 35, give me a sense, 80-20 of the actions and the kind of shift in ecosystem health.
Yeah, so the key one that we see is very much in terms of soil treatment and fertilizer usage.
Yeah.
And that is where there is a lot of focus at the moment. So not just in terms of, where are you applying it? Because, a lot of the time when you're thinking about a farm, all soil is treated to some degree to equal, but it's not. There will be pockets of good land, there will be pockets of poor land. So actually helping farmers focus on the areas that are more degraded across their entire estate. And then the second piece is actually thinking about the types of fertilizer that are being used. So one of our clients was actually moving towards a seaweed-based fertilizer and actually showing that, even over kind of a 12-month period, you were able to see a very steady uplift in terms of the soil quality off the back of the seaweed application. But this is real data that supports that. So when you then think about the trust and the relationship that is built between these large producers and the farmers in their supply chain, they're able to take these results and then roll them out across kind of their global supply chains.
So if we go back, 10 years ago, we couldn't measure this. And then I'm guessing over the last 5, we can measure this. And then now action. Are we just beginning to see the first steps of action of okay, I need to change my behavior and then I can now track the impact? Is that where we are on this journey? Or
yeah, I think so. I think, when we look at clients that are having an impact on the ground, the first step will always be mitigation. So how can they avoid that impact as much as possible? How can they make better decisions up front? There are some industries like mining where, they have a legal requirement to restore on the other side. But when we're thinking about supply chains, this is where we're getting a much more kind of data-based decision-making, but also partnerships, because when you think about margin profiles and the cost of a lot of these tools and the cost of the actions and risk of getting them wrong, you need support from your buyers to help you make the changes and to create that breathing space as well.
Yeah.
And I think this is effectively a dynamic that's very unique to particularly agricultural supply chains that we found. Whereas in the mining sector, you have the economic density in the land for people to be able to fund their own measurement and their own restoration.
Yeah, no, and in just here in the UK, we've been working with Great Yellow and the Even Load Catchment, and working with farmers like Tim Coates and Tim Fields, and 57 farmers doing exactly what you've talked about. And it's that partnership approach to say, how do we reimagine the land for soil health, but also something that we care a lot about, and I want to get onto, which is water.
Yeah.
Because also healthy soil stores a lot of water. You mentioned that you've launched. So not only do you do ECI, you mentioned you do the equivalent for water as well. Can you can you tell us a little bit more about that?
Yes, of course. So the soil ecosystem condition index was built to provide a 0 to 100 score for our client. And what we wanted to do was take that principle of working with eDNA data and giving you an aggregated metric and applying it to water. And freshwater was an area where we've done a lot of work, again, where there is a lot of interest in actually really understanding the impact of different industries, if you think about mining, agriculture, but also kind of infrastructure and utilities themselves, providing them with the ability to say, okay, what does healthy freshwater look like? How far away am I? What are some of the actions that I should be taking? And when you think about all of the different sectors and stakeholders that impact this single waterway, how do we, again, use the single metric to bring everyone together to align on the actions that need to be taken to improve the quality of this waterway? So this is a metric which is very new. So we're actually starting to test it with some of our first clients right now. So hopefully we'll be on kind of general release in about a month or two's time. But again, it uses the eDNA data sets. So it's underpinned by a high degree of accuracy, scientific rigor, and it gives you a score that is simple and easy to understand.
So on our last podcast, we had the CEO of Ofwat in here, and we like to talk about water: too much, flooding; too little, drought; and too dirty. So the water quality in the UK is like a big issue at a consumer level, at a business level. I know you work with some water utilities. I know you can't name them, but can you give me a sense as like water companies think about their next regulatory period, what their sort of like AMP cycles, what can they now do with this with this data set?
Yeah, so a lot of our work in the past has been using eDNA data and providing that to water utilities, or also to the consulting partners that they're using to kind of support these larger investment projects. The challenge with the raw eDNA data sets themselves is it's very difficult to actually interpret what's improving, what's declining, and actually, really importantly, are the right things improving? Like the pieces that we really care about for this ecosystem, are they increasing? And so this is where this single metric is very important, because we can take a baseline. This is what a healthy river looks like. Okay, great. Now let's take samples from this different stretches of this river. And that also then helps you break down those parcels of land. So, where are those runoffs coming from?
I was going to ask you, does that allow you to do attribution then? Because you can go along the river course.
You can go along the river.
And then you can see like how it varies, and therefore you can start to infer like whether I'm guessing right now negative attributions are, but when you flip it, what are the positive ones?
Yes, exactly. And, for us, the power really is in doing that entire stretch of river and starting to see, when you think about all the different flows that are coming in, how is that changing, the composition, where is some of the remedial actions starting to kick in, what's working, what can we learn from that? But actually doing that in a way where you can say, okay, it's 80 up there, but then it drops to 50 at this point. Like, what is happening here? Let's unpick this a little bit further. Now, obviously, looking at causality in this space is difficult because there are so many different forces that are kind of coming into the mix. But using that single indicator to know where you should be prioritizing your focus, where you need to dig a bit deeper, and which stakeholders you have to bring in, is really kind of where we're trying to focus the conversation.
And you mentioned the consultancies. I mean, I mean, maybe you can name a few of the ones you're working with, but they're incredibly important to this sector, right? They, in the world I've come from, pensions, the scheme actuary is an incredibly important consultancy firm. Like, can you give an example of how the engineering environmental consultancies are starting to use your technology, and how are they advising their clients with it?
Yeah, absolutely. We've always said that data is incredibly powerful in terms of bringing stakeholders together and shine a light on what's happening on the ground. But data doesn't mean anything unless you can turn it into insights and then ultimately actions on the other side. And this is why consultancies are so important, because they're able to take actually what is quite complex data and turn them into actions that are very, very relevant for their client or their industry and sector in which they're operating. So, we've been working with consultancies for, I think, 7-8 years now. They were some of our earliest clients. And, that's been across water utilities, it's across large infrastructure projects. We've also done a lot of work with the Great Crested Newt work that the season that kicks in at this point every year. But they've always been a really important part of kind of testing new technologies out in the field. And so for us, when we first developed eDNA, and it was actually, an Excel, like a CSV table that went out to consultants, they were a really important part of translating that into something that the clients were able to then take action off the back of. And I think as we start to develop these metrics, we want to continue to give them data that is incredibly powerful, that they're able to then apply at scale, not just in terms of the number of sites or global portfolios, but scale in terms of financial scale as well.
Yeah.
Like the really big financial decisions, how do we help drive those and underpin that with good data?
So I'm glad you said that, because, coming from the pensions world, thinking about what, it's always about like decision useful data, right? And then also like, has it worked after the event? But also pricing, like how does a company take this data and start to put either, like, let's just put materiality to it, but then how do we start to put a price or value on it? Because then I can start to do cost benefit analysis and go, well, how much would it cost me to fix this problem or that problem? And in a world of finite resources and finite budgets, which is the reality, like how do I decide what do I prioritize, what interventions? Is it worthwhile, or is this just kind of cosmetic?
Yeah, and I think this is where the kind of short-term, long-term piece comes into play as well. So, when you think about nature, some of the regeneration periods are quite long. You could be looking at up to 5-10 years to see a material improvement in an ecosystem that is severely degraded. And when you're thinking about business decision-making cycles, how many of those businesses are making decisions that are looking at a 10-year horizon, particularly in this macro environment, when actually they're probably more focused on what do I need to do in the next 2 years. And a big part of that is actually starting to really quantify that financial risk. There is a lot more work happening in terms of, what is this risk to your supply chain? How much of your portfolio does this particular part of your supply chain make up? What would, a decrease in yield of 20% mean for your bottom line? And how does that kind of play out in terms of your longer term financial results? And we have an amazing nature strategy team that are kind of sitting there really starting to think about some of those meatier pieces. Ultimately, we put those numbers on the table for businesses, how they then prioritize that versus, some of the near-term existential challenges, some of the shifting consumer attitudes, AI, all of the other pieces that they have to look at. That's ultimately up to them.
And do you know Vian Sharif at Nature Alpha? Have you?
Yes.
Yeah, because she's almost like at the other end, right? She's at the asset owner. I'm a pension fund. I own stocks and shares. I own Nestle and Unilever and United Utilities and Tesco, Sainsbury's, etc. Like, how long do you think before the data that you're doing sort of pulls all the way through, so that then I'm sat there as a pension fund, like our investor, West Yorkshire Pension Fund, and I can start to see, maybe look at different companies, because this isn't priced into the share price, right, of these companies yet. This idea that you could have two companies with two different supply chains, one that's invested in ecosystem health or is investing over 10 years and one's not. Like, paint me a picture of like when do these...
They connect.
When do they connect?
So we are already starting to see that shift. And I'd say this has really accelerated over the last 12 months, particularly on the financial institution side. So there are a number of quite large financial organizations that we're currently speaking to, not to do eDNA, but to run risk assessments across their portfolio that are built on top of the eDNA. And I think, investors are managing pretty significant financial portfolios, but they need data that is going to be accurate and that is going to drive the right decision, particularly over a 10-year horizon. And so for us, we've been slightly slower in terms of working up to the financial institution and that level of decision making, because we wanted to make sure that we could stand behind all of the data that sits behind those metrics. So making sure that they're verifiable, making sure they're auditable. If I had my trader hat on, would I trust that metric? And would I make a trade off the back of that metric? And I think the interest is there, particularly when you're looking at investors that have longer term investment horizons. Like, it's a really important part of their due diligence. And we're really starting to see that interest build up. I think it's just, there is also a product piece where we needed technology to get to a point where you could give indicators that could be disaggregated right the way down to the ground. So that what you're putting forward is robust and it's rigorous.
Yeah, and I think to use your trader analogy, right? If you're trading government bonds, there's a whole lot of data you want: your GDP data, inflation data, non-farm payroll in the US, or industrial production. You've got all of the, and they're not perfect, but there's a degree of trust that you put them and they get revised. I think what I'm seeing is that you're saying that we'll be able to get to that point where either at a company level they can start to make decisions, but from an asset owner perspective, I can start to compare company A and company B, understand the risk today, but say, like, well, what have they done about it? But up until now, I don't think there's that level of analysis when it comes to nature-related risk. Right?
No, and a lot of the tools that have been built, particularly over kind of the last 2-3 years, are working off publicly available data, because that's really what was there. But ultimately, financial institutions already have access to that data. They're already using it. So that's why getting the data foundations right first is absolutely critical, because that then gives you a set of metrics that stand apart from anything else in the market.
So you've launched these two new products, the Freshwater, the Soil Condition Health. Like, what next? Roll forward to 2030. Either what have you launched, or how do you see the market playing out from here?
Yeah, so I mean, if I think about what this means from a client perspective, we have large global enterprises that are assessing their entire asset base through a nature risk lens.
And when you mean that, you mean like a company, right? You mean
a company, yeah.
An Anglo-American,
exactly,
a Nestle, a Unilever.
Exactly. Yeah. And, they're looking across their entire operation, and they have an understanding at varying levels of resolution. So we talk about resolution in terms of, you could do a desk-based risk assessment for probably 70% of your portfolio, and that is fine. For the other 30% where we flag that they're higher priority, you have to go deeper. And this is where they have some ground-based validation. All of that data should then be feeding through to funding decisions that are being made for new investment. They should form part of due diligence when they're thinking about, any M&A surrounding their assets as well. And it should be data that is able to flow up and down that financial system in a way that we see with financial data at the moment. So that is the goal, but it's absolutely critical that we're really connecting those high-level indicators with the best quality information that we can get on the ground. And also that information has got to be refreshing. It's got to be as recent and as relevant as it can be.
So we started with Harry Potter. If we had Harry Potter or Dumbledore here and we could wave that magic wand, like, what would you like to see happen? We can do a magic spell. What shift or transition would you like to see accelerated?
I mean, for me, I have a finance background, so I look at this very much through that finance lens, and what really ultimately drives meaningful business decisions. There's been so much talk about putting nature on the balance sheet, and for me, like, if you can apply a financial value to every single resource that you are using, you manage them in the same way.
Yeah,
and I think a key challenge we have is we don't have that financial value. Again, our natural resources. And so we disregard them when we're making our financial decisions and our operational decisions. And so for me, that's the big hurdle, because ultimately, I have no doubt that companies are going to see the depletion of natural assets play out in terms of their P&L over the next 5 to 10 years. Like when you think about the level of impact that we're seeing across supply chain and climate more broadly, like that pinch is already happening. But we have the negative without having the positive. What are the resources that you have today? What are the ecosystems that you're using today? How do you preserve that capital? And how do you use it to hedge against long-term risk?
So, but who's going to put the price on that? So I completely agree with that analysis. And again, I was speaking to someone and they were telling me there's a company in the US that self-insure all their staff. And then someone got really sick. So instead of paying for, Bupa or whatever, because they self-insured. And then they started investing in all the stuff that I've just done as my sort of Bupa Wellman, right? I know there's stuff I can do that will materially change my health in 10 years' time, positively or negatively. But I haven't put a price on it, but there's stuff I need to do. In the financial world, if I'm in video, I have chips, I have inventory, I depreciate assets. If we were financial assets looking at companies, who's going to put that pricing? I can see that you're giving the data and the validation and the evidence, but there's another step that needs to convert that and go, yeah, now I need to put a price on that. Where do you think, is that from the consultancy world? Is that an extension of what you do? Is there another bit of the value chain? Is that Bloomberg?
I think it's probably going to be a mix. And I think the reason is the value is unique to every business. So the value that I derive from a water source will be very different to the value that a company in a different sector derives from that same water source. And so we can't take a universal price for water and apply it across every sector if we want to think about the financial impact specific to that company. And so I think that's where you do need something that has kind of the bespoke or configurable nature that you get with consultancies. But the mechanisms themselves and those structures can probably be productized using either technology frameworks, some sort of accounting principle that we like to put in there as well. But it's got to be viewed through the lens of the business itself.
I couldn't agree more. Our entire premise is you need that the value. Obviously, we're the asset side of the liability problem. But if we restore an oyster reef to restore mean species abundance and to clean water, the value of that oyster reef depends in value depending on location and its value to a business.
Exactly.
Which is the flip side of what you just said. And I think this has been probably one of the challenges when I first got into this, where people talking about biodiversity units, because that's a generic value. But actually, if I'm a water utility, so the work that we've done with Great Yellow and with Evenload, that benefits Thames Water. If I'm United Utilities, it's interesting, but I don't care because it's not in my catchment.
Yeah.
And vice versa, if we restore the Irwell or we restore some peatland, that is valuable to United Utilities, but it's not valuable to Thames Water. So I think that is one of the kind of big shifts in mindset between, as you say, going from carbon to going to water or biodiversity. But okay, so let's take that further. So I'm now a company. I'm a CEO, CFO. I'm the board of these companies, and I can put a price on these things. I then start to invest in them. What is the kind of 5 years down the line from that, 10 years down the line from that? What does that now mean?
So, if we think about the behaviours that we'd expect that to drive. So when you're looking at kind of depreciation of assets, you typically think about, okay, what CapEx is needed? What does that investment cycle look like over the next 5 to 10 years? Actually, when you apply that mindset to your natural resources and your natural ecosystem, yes, there will be that short-term period where there's a lot of investment going in because that regeneration takes time. But on the other side of that 10 years, actually, you're in a position where you have a resilient supply chain, you have better yields, you're ultimately spending less money on things like chemical fertilizers and treatment and remediation actions. And actually, all of the other benefits around reputation, your team, the messaging that you're building into your marketing and branding, for me, that's extra. That's like incremental to kind of the core financial foundation that you have put in place, by preserving your natural assets.
And you talked about time horizons earlier, and this is like the thing that kind of irks me is, we're talking right now about closing down fertilizer factories as a result of the war in Iran, and then the fact that to spin it back up will take 5 years. So everything else we do, if we want a new oil and gas, anything, new nuclear power, these are they require, as you say, big upfront CapEx, big investment, and so forth. Actually, when you frame it in that way, I think nature recovers pretty quickly. As you say, you start to get meaningful results in 5 years, big impacts in 10 years, and then you lock it in. And this goes back to your point, is that we need to take the work that you've been doing, turn it into pricing data, and then effectively, use the same mechanism that, let's say, a company like BP has been doing for years. They've been spending billions of pounds investing in infrastructure to be able to extract oil, distribute it, and so forth. These are huge planning cycles. That mindset as a business practice is a pretty good one. Obviously, the issues around extraction of hydrocarbons and converting that into energy. But this idea of CapEx to create a product that we can sell, that to me is the missing piece. If we've got the before or the as is, to what extent can you predict that this will be if we do these interventions? Is that, because is there a degree of faith, or is there a sort of, actually, I know now that if I, in our case, if we re-wiggle the rivers, if we focus on soil health, we can now store more water, aeration will increase, means species abundance will come back. This means there's less water treatment for Thames water. To what extent can you not predict, but start to give with a high level of confidence that these actions will lead to that in 5, 7, 10 years' time?
So for us, that's our product goal. So we want to get to a point where we can run scenario analyses for organizations where you say, what does my do nothing scenario look like? Actually quantify that for me. And then if I take these 3 actions, what is the upside? How long will it take to come through? What are the impacts that I expect to see? A lot of that is getting the data from, those feedback loops from, this is the baseline, this is the action taken, this is what we've learned, this is the timeline, and then the horizon it took for recovery, and then using that to feed back into the models. So the more that we start to see those feedback loops that are quantified with data, the more we're able to train up models to be more forward-looking.
So when are we going to get that model on the hook?
We need lots of people to be baselining and quantifying the impact that they're having. The quicker we get that data, the quicker we can spin up the model.
But like, is this 3 years' time? Is this, like, at a high level, I would like joking, but 80-20, what's the sort of time zone to get to that result?
So I think, this definitely should be something that we have in place in 5 years' time. And I think really it's a confidence level, because theoretically you could release this in 2 years. But the amount of data that it will have been trained on will not be anywhere near as high as it would be in, say, 10 years' time. But the more data we have, the higher that confidence level grows, which is, we did that with our species risk predictions. So, when we give you a prediction of which invasive species or endangered species you may find across your portfolio, we will attach a confidence indicator against it. And that will be based on the density of data and confirmations that we have in that region. So if it's high confidence, you know that we picked it up somewhere. Yeah. If it's low confidence, it's a purely modeled outcome. And it's effectively the same prediction model, but starting to think more broadly in terms of, what data, which species you're detecting, and what natural ecosystem impacts that you're actually starting to quantify, and then how you then translate those into financial outcomes.
Because you're right, that's what you need it to be, nature on the balance sheet. Because for a balance sheet item, I need to know if I'm NVIDIA, if I build a chip, it's worth that, it depreciates over that. We need to get to the same point for soil health or for fresh water. And what does this mean to this catchment?
Exactly.
If we get there, then that completely transforms the ability to raise capital, equity, or debt as a corporate to make those transformations or to work with other people. I think that's the other thing about nature, right, is that most of business people are kind of like quite siloed. Okay. Whereas actually, I think the answer to the solutions is that the nature restoration impacts many businesses. So we all need to invest in that same sort of metaphorical bit of water in between us. It impacts your business different to mine.
Yeah. But
you're going to give us the data set to know, what does it mean today? And if I invest in it, what does it mean to me tomorrow? Yeah. The good and the bad, if it continues to degrade or if it restores.
Exactly. And it's also about What are the proof points that we have to show that it works?
Yeah.
How do you build that confidence? Because if you invest in new energy infrastructure and you say, okay, we know that that's going to pay out in 5-10 years because it's a fairly established business model and we've seen it done before. If we could get the same proof point for nature recovery, then you're building that confidence where you have people that don't know the space saying, oh, I know that if I invest millions here and I do X, that will give me Y. Somebody had proven that works, and therefore I buy into that, and I'm now more likely to invest.
Well, I mean, and that is exactly what happened with renewables, right? I needed to know with more and more confidence that CapEx today will generate this much energy over the next 25 years and therefore produce that much money. I can haircut it, I can price it, I can underwrite it, I can finance it. So at the beginning, we talked about, when you were trading European government bonds, and we talked about having this sort of Bloomberg dashboard. My sense is that all of us are basically trading nature blind, whether I'm a corporate, where I'm an asset owner. We've talked about your indices, prediction models. Like if you were this sort of nature trader in 2030, what's on your Bloomberg screen at this point in time that allows you to make better trading decisions?
Yeah, so there's two things that really stand out on a Bloomberg dashboard. One is you have single metrics that sit next to companies, assets, commodities, whatever it is that you're trading. So the nature equivalent could be a nature risk score. We're actually about to launch a risk insight product at the beginning of the summer that will give you a single physical nature risk score for every single one of your assets. The second piece with Bloomberg is you see those tickers moving up and down all through the day. Now, a lot of companies at the moment will look at their nature impact on an annual basis. So it gets to reporting season, everybody runs the numbers, they report the numbers, and then they don't look at them again for 12 months.
Yeah.
Our models, we have eDNA going into our database every single day. You have geospatial data layers that are being refreshed multiple times a day by companies like Planet. Those indices, actually, even today, could be refreshing on a daily basis. So it's real time, and it's standardized across the global portfolio.
I love it, Dimple. It reminds me when I started at Deutsche Bank, and I can still remember walking onto the trading floor. I worked in FX. I remember this guy Jorge telling me about non-farm payroll, and it doesn't mean anything to anyone outside of banking, but it's a big deal. And then suddenly euro dollar would move on the back of it. So this idea of not just good quality data, but it not being static, and as you say, it going up and down. Like that's then a gear shift in of itself, because now we're talking about the rate of change of something, which is huge in financial markets. So like if we then have this Bloomberg for nature and we can see real-time change, what does that mean?
Think about asset allocations. When you think about climate events, a lot of climate events do come out of nowhere. I mean, we're seeing that increasingly now in the summers. So, if there is an extreme climate event, how does that shift to impact nature risk across different parts of your portfolio and also different geographies? If you see that flash up on your Bloomberg terminal, then that's going to change the way that you're allocating your asset mix. But actually at a company level, you're also starting to think about what you need to be doing today in terms of investing in different parts of your supply chain and your operations as well. So I think that change is really important because fundamentally it's a change that drives the decision. It's not a static metric that you look at once a year.
Yeah, I mean, there were a couple of things that were going through my head there, which is, one is, it's a bit like credit ratings, and that, they obviously go up and down as things change, but also just the broader point of resilience. I think whether it's Ukraine or whether it's, Iran, it's taught us that we have these sort of choke points, whether, not just around oil, but also natural gas and then fertilizer. And then in the case of Ukraine, wheat. And actually, I think it points to a broader point, is that you want businesses that don't get everything from one place. There's a value to sort of a distributed sourcing. And then I think it becomes even more prescient in that, we're about to roll into another El Nino period, which means that it feels like the weather's been bad over the last 2 or 3 years. I just don't think people realize what's coming in the next few years as we roll into another El Nino period. But as you say, what that will mean is as we start to see this climate event is happening here, we've got wildfires here, we've got droughts here, we'll now have the data, the real-time data, which goes, which of these companies get their coffee from there, get their wheat from here, are exposed, or there's just not enough water to produce something.
Exactly.
Yeah.
And I think it's that pinch point that ultimately will make it very, very clear that we've got to be preserving and protecting rather than finding ourselves incredibly open and vulnerable and then trying to work out what we do next.
Yeah, and that is the good news story that I want to make sure we finish on, because in climate and nature, too often we focus on the problem, which I think is right, to build the awareness and all the rest. And by making it more real time, what that means is that there's a business case to invest. And once we start to invest, we can start investing in nature resilience. And the exciting thing about nature is it does restore quite quickly, like 5-10 years, and then compounds over that. And then the even cooler thing about nature is actually it's a compounding asset. Sun, water, the atmosphere, the soil does the work for us, right? It's truly a regenerative asset. And so that is the exciting thing, is that all of a sudden, in highlighting the real-time cost of the problem, it puts a real-time value on the asset. And that's how we get to nature on the balance sheet. Because at that point you go, this thing is incredibly valuable to my business, or this thing is healthy ecosystems is valuable to my assets. And that's valuable because I can now pay my pensioners because I know that my assets are going to continue to perform for the next 10, 20, 30 years.
Exactly. And on a human level, can you imagine how miserable we'd all be in the absence of nature?
Yeah, well, I mean, obviously, restoring nature, you and I love it, more of it. But look, it's been a real pleasure to get to really understand eDNA, to understanding new products, to think about pricing, having this kind of Bloomberg dashboard for nature. That's so cool. So thank you so much.
Thank you. Hope you've enjoyed today's episode. Like, subscribe, or share with a friend.